Welcome to Property Focus, I'm James Mitchell. Making headlines this week, investor activity in Western Sydney continues to gain momentum and units outperform houses when it comes to capital growth. But first, to our lead story. The Australian residential market is unaffordable and overvalued by as much as 15% according to the International Monetary Fund. However, a strong economy and higher standard of living make Australian real estate a safe bet for investors and justify higher property prices, Century 21 Australia Chairman Charles Tarbey told Smart Property Investment.
The International Monetary Fund was saying that in Australia the prices in properties are 15% higher than they should be. And I agree with that figure, and I agree that they probably should be even more, because we have people in Australia living in larger homes. We live in 90% live in capital cities. The majority live on the coast. Our climate, our economy, I think we should be 15 to 20% higher than the rest of the world right now. I mean, where would you rather be?
The Western Sydney Growth Corridor has been a favourite for property investors over the past few years, with entry-level prices creating the ideal market for positive growth and strong rental yields. And while demand for housing in the Greater Western Sydney region remains strong, investors are beginning to move towards the Canterbury and Bankstown areas, according to APM senior analyst Dr. Andrew Wilson.
I think that there's still activity in that western growth corridor in Sydney, but particularly Canterbury Bankstown has also been very popular amongst buyers, and that's just the shift of buyers moving from a popular area like the northwest area or the inner west area, which then becomes overbought in a way. The prices rise quickly, and then investors move to the next area, and we've seen a lot of activity in Canterbury Bankstown in that $600,000-$700,000 price range over the second half of 2011.
When choosing the type of property they wish to purchase, investors are often torn between houses and units when looking to achieve the maximum growth and rental return. Houses have traditionally outperformed units, but RP Data's head of research Tim Lawless has seen a spike in the demand for units, which in turn has accelerated capital growth.
Historically, say over the first half of the decade, houses absolutely outperformed units, and the reason for that was generally because land values were rising at such a rapid rate. Unit values were also rising, but not at the same rate as house values. But over the second half of the decade, and more recently the last couple of years, units have been showing a greater rate of appreciation, which I think comes back to the fact that there's a growing level of demand for unit living, not just from first home buyers who see units as being much more affordable entry point to the marketplace, but also from young professionals, from young families who prefer to live in a more strategic location where their money goes a little bit further.
And don't forget to pick up the latest issue of Smart Property Investment, the magazine that yields more for property investors. In our latest edition, we show you how to identify emerging local economies that are set to boom. That's what's making news this week. I'm James Mitchell. See you soon.